Hello, I'm Mark Dunne, the editor of Portfolio Institutional magazine. Welcome to Portfolio Briefing, a series that takes a close look at the investment markets. This interview is going to focus on green bonds, which is a form of debt that funds projects that are designed to make a positive environmental impact. Now, there's two reasons why green bonds have come up on our radar. The first, of course, is because of their work in fighting and combating climate change. But the second reason is its growth. In 2019, the market is worth somewhere in the region of 257 billion US dollars, which was 51% higher than it was in 2018. And to talk to me about this particular subject, I'm joined by Bram Bos, who is lead portfolio manager for green bonds at NN Investment Partners. Hi, Bram, how are you?
Hi, good morning. Yeah, I'm good. Thank you.
Thank you for joining me. I suppose a good place to start with the figures I just gave there. The market, of course, has seen some quite rapid and strong growth. So why are investors so interested in green bonds?
I think there are a few reasons for it. First of all, a lot of investors, they feel the urgency to do something positive in terms of stopping climate change. I think more and more investors are realizing that there are products available to really implement this in portfolio. Then a lot of people also ask me, yeah, but why green bonds? I think the good thing of green bonds is that in general these are liquid bonds. They trade and behave quite similar as normal bonds. So from that point of view, it makes it rather easy to take a little bit out of your normal fixed income portfolio and replace it with green bonds without changing the risk return profile too much from a portfolio.
Okay. So how different is it to managing a green bond portfolio than it is managing a traditional portfolio of bonds?
Yeah, it is a little bit different. First of all, the universe is a bit smaller, so that makes it different compared to a larger fixed income portfolio where you can pick and choose whatever you want. So that's one part which makes it different. I think the second one is that yes, you have to do more work because you have to take a look at green bonds and form your own opinion on them, whether or not they are really green and meet your own internal green criteria, yes or no. So there's more work to be done for managing a green bond portfolio.
Okay. And here's a question I'm sure a lot of investors have asked you down through the years. Do investors have to sacrifice return when buying a green bond instead of investing in more traditional debt?
Yeah, that's a good question. I think it's the most asked question. I've had really a lot of meetings over the last couple of years. This always has been the first question people ask. So I think there are two different angles here. I think the first angle is what is the yield of a green bond compared to a non-green bond from the same issuer. If we look at yield curves from issuers and we plot green bonds and non-green bonds on the same curve, we don't see a very big difference. And I think that's also not really possible because in the end, a green bond has the same credit rating, same risk return characteristics, and the same legal status as a normal bond. So from that point of view, we don't see big differences. Sometimes there can be a little bit more demand for green bonds, but that's all very short-lived. So that's one part of the story. I think then the second part of the story is, yes, okay, all nice and well, but how performs a portfolio of green bonds compared to a portfolio of non-green bonds? A portfolio of green bonds is different. You have companies in a green bond portfolio who are more conscious of ESG and climate risks. We think in the long run, these are companies more likely to survive. They are more transparent, more innovative. So in the long run, we really think that that portfolio will perform better. And there is some proof coming in more and more that those returns are really better on a yearly basis. Although I have to say the history is still very short, so you have to be a bit careful. But there is more and more proof coming in that portfolios of green bonds are performing better compared to portfolios with non-green bonds.
Okay, well, that's performance. What about transparency in the green bond market? This is a big topic, of course, for investors wondering if they do exactly what it says during the pitch. I mean, how does NNIP ensure that investors are not exposed to greenwashing?
Yeah, so for that we have built our own NNIP green bond framework to really assure that we only have dark green bonds in our portfolios, and really, as you said, are very confident that we are avoiding greenwashing. For us, first of all, we do all the analysis ourselves. I think that's really important. You cannot take a green label for granted. So that's one thing which is important. The second is, I think you continuously have to keep on monitoring green bonds, also after issuance, because you want to make sure that also in the future that the projects which are going to be funded with the issuance of a green bond are really green. So after issuance, you have to keep on monitoring that. And the third point I would want to make is that and that's really our green bond investment belief, that the greenness of a bond is not only determined by the projects which are financed, but also by the broader ESG strategy of the company. So we want to avoid an oil company issuing green bond and at the same time investing $20 billion in fossil fuel projects. That's something which will never happen with us. So that's why you really have to take a look at the broader strategy of the company as well.
Okay. Now we're speaking at a time when the world seems to be in lockdown because of the COVID-19 pandemic, and that has caused a lot of volatility in investment markets. So how have green bonds weathered this particular storm at the moment?
Yeah, I think again you can look from the two different angles I mentioned before. So how have bonds, individual green bonds performed? I think we have to be realistic here. I think in the illiquid period, in particular in March, all bonds sold off, green and non-green. Everything became illiquid. We did not see a very big difference. I think, again, when you look at the portfolio through this crisis, a portfolio of green bonds have been doing a little bit better. If I look at corporate green bonds, they have outperformed year to date around 70 basis points, 0.7%. That does not look like a lot, but I think if you annualize that and then have this year after year, for in particular institutional investors, this is a big difference. Also, what we have seen from our clients through this period in March and April, when there was a lot of volatility, we did not see any of our clients taking back exposure in green bonds. So the structural flow towards sustainable finance and in particular green bonds has been unchanged. And I have to say, over the last few months after March, I think it seems there's even more of an acceleration happening. It seems that investors have even more urgency to invest in things which do good. And again, green bonds are a very easy way for a lot of investors to implement this.
Okay, it's interesting. So what impact has this had on issuance? We talked about the size of the market last year. Are you expecting something similar in 2020?
So far this year, the issuance has been lower, also than what we projected. Obviously, again, this is related to the volatility in the market. A lot of issuers decided not to issue in the March-April period. But again, here it seems more that issuers are postponing their issuance plan. It's not that they are banning them, they're postponing them into the second half of the year. So we do expect a catch up in the second half of the year. And one sector where we expect a lot of issuance from in the second half, for example, are governments. We've spoken to several governments after the corona crisis in March, and they confirmed and committed again to start issuing green bonds in the second half of this year. So the growth is mainly going to be concentrated in the second half of the year, but indeed it's going to be a little bit lower than what we initially projected.
Okay, gotcha. Okay, social bonds. There's been quite a strong pickup in issuance of those guys, from what I've been reading. I mean, how do you think that particular market will develop alongside the green bond market?
Yeah, social bonds is a little bit a newer category, and it always has been relatively small. through the Corona crisis, there really has been a very strong surge in this market. So the social bond market is really closer to about 70 billion euros globally. Still relatively small, but it's really coming from a very low base. So the growth is there really spectacular, as we can call it. So we think this is really positive. I think it also shows that, next to green, other ESG themes become more important. And the whole concept of both social and green bonds is that there's more transparency and more clarity on where the money is going to. And in the end, that is really something which investors want. So we are really positive on this. We think the social bond market will develop further. From the other hand, I also have to say that the social bond market is still quite far behind the green bond market. So it still needs more development. And I also think it's a bit too early to really have a pure social bond fund or portfolio. But yeah, it could be that 1 or 2 years from now that's different.
Okay. It's quite interesting because it's not just about social bonds, green bonds. In terms of labels, the sustainable debt market is quite congested. We've got sustainability bonds, sustainability linked bonds, blue bonds, ocean bonds. I mean, what are your views on all these innovative labels and how do you distinguish between them as an investor?
Yeah, that's I have to say that's becoming more and more challenging. There are a lot of new labels coming to the market, and for us, we look at all those different types and structures. I think in the end, the fact that there's so many new labels coming to the market is good, and it is really a positive sign that people want more in sustainable finance. And I think more and more companies are looking for different structures, maybe because sometimes the green bond concept does not fit them or the social bond concept does not fit them. From the other hand, you also have to be a bit careful here. With all those new structures, sometimes there are no good governance frameworks yet in place or no clear criteria. So a bit of a critical note here and there is really very good. But overall, I think, yes, this is a very positive development.
Okay. And so how do you, as a manager, select bonds for your green bond portfolio? What's your process?
Yeah, so we have our own internal process where we take 3 different steps to assess green bonds. The first 2 steps are really focusing on the projects. So the projects which are being financed with the green bond, they have to be in alignment with international standards like the CBI taxonomy, the newly developed EU taxonomy, the green bond principles. And then the last step in our process is focusing on the ESG policy and strategy of the company. So really to make sure that we avoid greenwashing. So really in a nutshell, that's how we do it. We do it for all the green bonds which are coming to the market globally. And we store all these pieces of data in our green bond database, which is really the beating heart of our green bond strategy.
Okay, Bram, you've given me quite a good sort of overview there of exactly how the green bond market looks. And one final question is, why should investors choose NNIP as their green bond manager?
I think, if you look back to how we have evolved, first of all, we were one of the first asset managers to have a dedicated green bond fund. So we were really one of the early movers in the market. Second, we really do everything in-house. We never take a green label for granted, and we have a strict screening. So you are 100% sure that there's no greenwashing in our portfolios. Next to that, I really want to emphasize that, yes, being green is important, but performance is also really important for us. And that can go hand in hand, actually. And when you look at our track record of our green bond fund, which we launched in 2016, each and every year we have been able to outperform the index. And I think there's no other green bond manager who has been able to do that so far. So I think that also makes us different. We currently offer also 3 green bond funds, to clients to really be able to completely greenify fixed income portfolio. I think we're the only manager who has so many different funds. And we also have a very large dedicated green bond fund, which also really makes us unique. It's not that, one portfolio manager, manages the green bond fund part-time. We only have dedicated people, attached to the green bond strategy. And that really tells us that we are dedicated to this strategy.
Bram, that was fascinating. Thank you for your time, and I hope to catch up with you and speak about this again soon.
Yes, thanks a lot, Mark.
Thank you, Bram. Thank you.
Bye.
Goodbye. Thank you.